Good evening, everybody. Kind of an interesting, I say not interesting, but just a unique analysis process based upon candlestick analysis is that we can see pretty dramatically what's been happening as far as investor sentiment at times when we've got some outside influence of Iran affecting the investor sentiment. But what makes it much more easy to kind of evaluate what's going on is because of the candles themselves. That when it opened lower and came back up, couldn't close below the T line. Oh, TW, yeah, it had to be, I should have said something, heavy winter because it's cold out there tonight. But the overall assessment is they haven't been able to close below the T line. This signal, how do I get rid of that little thing? Always display tabs. Maybe that was it. All right. They haven't been able to close, dang, Jiminy Christmas, I thought I had it there for a second, close below the T line. Even on Friday, when the Dow was down 230 points, you could see what was actually happening in investor sentiment. It opened lower than that. I don't know how to get rid of that. Hide. Okay. That did it. No, dang. What the heck? Makes you just want to kick your grandmother. I don't know how to get rid of it. All right, we'll have to. But even today, well, again, Friday, Dow down 230 points. But what were the other factors that we, as candlestick analysts, could see? Well, they were buying after the open, so there was buyers in this market. Number one. Number two, where did they close it? Still back up above the T line. Gapped it down 200 points today. Not good. But because of the graphics, the candlesticks, we could see that they were buying above where they opened. So that still kind of implied there was buyers in the market. Now, the strength, obviously, was not only did they bring it back up above the T line, but they brought it back up above Friday's close. The Dow up 68. The NASDAQ, same scenario. You can see where they've closed up here. Everything is still showing that they can't close it below the T line. So this is much more visually relevant as far as analyzing what's going on in investor sentiment. When they open it lower and close it above where they open, even though the overall move for the day is down, it's still revealing that there's buying going on. See if I can get the S&P 500. Same scenario on the S&P. And the transportation index. Something is wrong here. That's why it was wrong. Okay. Again, transportation index down 62 points. But look what was happening. They were buying. So this is why the information built into a candlestick pattern, trend, and specifically each signal gives you a heck of a lot more information about what's going on, keeping you from getting whipsawed. So when I woke up this morning, one of my positions is EPZM. Had some very good profits on some calls, and they open it down here. I'm thinking, oh man, gave up most of my profits, but I could see what was happening. Just slowly, they were bringing it back up to the point where they actually closed it up 1 penny from the previous day. But what was the other relevant analytical factor? They still closed it above the T-line. So a belt hold type signal. Now I want to see what they do from here. Also, when you're looking at specific commodities, crude oil, as you can see, ever since the Morningstar signal right here, has been in a steady uptrend. However, if you look at the longer term range, well, I was going to say, it's been choppy, but it's been in a slow uptrend. Let's see if I can make it even smaller. The reason I haven't been trading crude oil as much is because of the, what do I want to say, the change of conditions over the last, say, 2 years, where now the United States is a net exporter of crude oil. That in itself becomes a major factor of what the buying and selling demand. Hold on for a second, John. Let me finish this. That if the United States does not have to depend on importing crude oil anymore, that means all the events affecting crude oil supply out in the world has that much less of effect as far as price, because the major user of crude oil is now its own producer, the U.S. So that market is not going to be as volatile anymore as it was had the U.S. not, it would still having to import crude oil from other sources. So I say that because it's been kind of in a range here for a while, and it might be in a $65 to $55 or a $50 range for quite a while. Oil was bought on the world market. Yes, but the demand, meaning the U.S. being the biggest demand, is now not demanding it because it produces its own supply. But oil companies can export it if prices climb, and prices will increase in the U.S. True, but it's like anything else. As the price raises, the supply of crude oil in the United States, which is still fairly extensive and not fully, it's not being, it's not being pumped out of the ground at its maximum rate. So if prices rise, oil companies that have wells that are producing X number of barrels, they can increase the pumping to 2X. Or wells that have been sitting idle, they can open up and bring up more supply, which means the higher the prices goes, the more U.S. companies can start producing more oil, taking advantage of the higher price, which obviously creates more supply and kind of dampers the overall price movement. U.S. That probably is true. So a lot, and we'll get to some of the crude oil prices. Dean, yes, I kept my EPZM because it did gap down. Now it gapped down on the basis that they were exercising a $50 million option of something. So anyways, which is not anything that changes the fundamentals of the company. It's just a quick altercation of the supply and demand of stock on any given day. So the reason I held on to it was, even though it opened much lower, I had to watch to see if they were still selling it off or whether there was buying starting in here. The fact that we could almost see buying immediately told us, all right, that's the supply and demand. So somebody's selling stock because of the whatever the financial stuff, the option stuff that we're doing, exercising an option. Said, all right, maybe this is temporary supply and demand. Fortunately, I could see that once they started buying, they were still buying. So even the fact that they were buying, whether it was a little bit or this whole move, told me, all right, that was supply and demand, that over the next few days, I could do that. So the 10-minute chart, that this is what was happening all day long. And then notice everything that was occurring on the 10-minute chart. There was your T-line crunch. There was your kind of your scoop pattern. There was your J-hook pattern. So, and even if you wanted to get more exacting, there was your 5-minute chart. So anyways, anytime, and so this, I guess I should be going back to say, anytime you see something that does not affect the fundamentals of a situation, and it could be they're offering new stock, and what happens when a company comes out offering new stock? Well, the first knee-jerk reaction is, it's diluting the stock. Everybody sells off. But then the money that is following the company realizes the reason they're having to put out new stock is because the company's doing well and needs to expand faster. And so that's why a lot of times you'll see an announcement where they're putting out new stock, and then after a couple of days it comes right back up again. I don't know, I got way off track here. I forget what I was talking about. Oh, somebody wanted to look at gold. See if this is the right chart. Maybe not. Gold, yes, shooting star. You still kind of have a breakout of a fry pan bottom in the overbought area. So what do we expect? We expect more upside. Let me make this bigger. But we also anticipate a fry pan bottom breakout. So what's the logical thing to do at this point? You pick out a spot that tells you they're selling instead of buying. So if I was long gold, I'd have a sell stop just below the low of, or the open of today. This is after hours right now. If they bring it back down here, what's our warning? First of all, the shooting star in the overbought area, but the alert was they gapped it up. It's either a fry pan bottom breakout and they should be moving in this direction, or if they come back down through this level, that means there's profit taking. Got to watch to see where they're going to pull it back to. So that's an if-then type scenario. But it's an if-then type scenario based upon what happens in human nature normally in a situation like this. Again, fry pan bottom breakout should be going this way. Shooting star gap up in the overbought area, watch for profit taking. So at least you know what to do in this situation of whether to hold it or get out of it. Would the entry be at the bottom of the gap? Not necessarily. If it came back down through this level, then you have to watch to see if it's going to come back down here and or the T-line. So you can't necessarily say that would be a buy point. All you can do is analyze what is it doing when it comes back to specific levels. That will tell you what levels they're using for their buy points. Okay, so with today's picks, one of them was 9, which is an oil-related firm. Had a slow curve, kind of had a little, almost a little kicker-type signal. If it opened positive, Jules, what is getting too far away from the line? Oh, gold. Okay, let me go back. It's not that far away. I mean, even if it hovered in here for a day or two, your T-line would be up here, and that wouldn't say that you're all that far away from it. I mean, that is a warning, but not a definite criteria until you see what it actually does. But the fry pan bottom begin, back here. That's what you would consider the beginning of your fry pan bottom. Gold, last 3 candles more important. Last 3 candles. 1, 2, 3. Well, the fact, that they broke out through this level, then the gap up. So now, I guess I'll stay here for a second. Now you have your analysis that we try to, compared to the distance. Yes. But again, what's the other analysis? What do we expect coming out of fry pan bottom? A strong price move, which means it might move up and the T-line kind of lagging behind until you see it get real excessively away from the T-line. So this is to give you a format of what is happening based upon the things we know about our patterns and our indicators. One, we know a fry pan bottom breakout should produce a very strong price move, which means we should have more upside. 2, we've got a shooting star with a gap up in the overbought area. What could that be telling us? Start watching for profit taking. So that just gives you a very simple if-then analysis. If this is a fry pan bottom breakout, then it should trade higher. If this is a gap up shooting star, then if it comes back down through this level, you probably want to take profits and wait for the next buying. It's not really a concern as far as the direction, because we don't know what the direction is just yet. That's just based upon probably today's action. Now, if this came and closed down here tomorrow and this started rolling over, yeah, that would be more of an indication that yeah, things are starting to roll over at that point. So if I was long gold and I was trading gold, I'd have a safety stop just below today's open. And from what it looks like, you know, they pulled back a little bit bigger. But now they're, let's see, they opened at 1567.5, and it's trading at 1566. Have a little red candle, yeah, just slightly red. Yes, we're not trading stochastics because you could be in an uptrend and that the stochastics could be in an overbought area for months. Okay, so let's see. We went back to 9 because of the pattern setup, and that gold or crude oil was an issue right now. That it was isn't it significant when the red line is below the no? So we're not trading stochastics. All we want to know is where is stochastics relative to the overbought and oversold. So if you're going to trade stochastics, you might be 2 or 3 days late compared to what the signals are indicating. So because we knew crude oil was affected by the Iranian situation, that maybe that sector is going to act strong. So maybe I'd say with crude oil heading up, and we can see this not fry pan, but slow curve, that we could be buying on positive trading because we had other indicators like crude oil trading stronger and this kind of breaking out. Even though the market was trading off as hard as it was, the oil sector, some of our other positions, Marathon, still trading as this bobble breakout. And Nove, still in this steady uptrend. Whiting, still in this, there's your left-right combo, kind of a breakout. It was opening positive today. So all these things that you can analyze based upon the chart itself, and you say, crude oil is trading positive again today. The market's opening lower, so I'm going to wait and see what happens. But, oops, they open up positive and they start trading at positive. That must mean it's more affected by crude oil and that whole sector versus what the general market is showing us. We also recommended KNSA because there's your scoop pattern. So it acted nicely today with the anticipation that what do we expect coming out of a scoop pattern? That kind of slingshot effect to the upside. MBOT was one where, again, this is why you want to see what it does after the open. Now, had this opened and started trading positive, yeah, we're going to jump in. The buyers are there. The fact that it opened and started trading lower, this is up. They aren't buying yet. They probably are buying, but let's just wait to be safe. So on a situation like this, it is much higher probability that if it's backing off after a buy signal and stochastics starting to curl back up, I would rather see it pull back and then come back up through the open. That becomes your buy point. Why is that a good buy point? Because at least from here, you know it's starting to move positive, which is exactly what you would expect after a candlestick buy signal. And it's confirming that buy signal. when would you get into, when did you, oh, we recommended whiting, didn't we, on this day? Or was it over? I know I mentioned it a couple of times as being the right place to be in. I can't remember which day. The only reason I know it was recommended is when I recommend something, I put it on the portfolio list. If it's on there, it's because we recommended it at some point. So I don't know the exact day, Sue, that we recommended this. I would suspect it was that far back. How long do you give these situations to see if it starts trading up or down? Oh boy, on a day like today where the market opened way down, I'm not going to do anything on the buy side. Okay, you bought whiting on 12.17. All right, so it was on this, right in this area. All right, so yeah, we probably recommended it on this day because of the kind of the bobble breakout. Now I forgot what I was saying. Well, if that ain't no fine howdy do. Oh, how long? Okay. So on something like this, if the market is opening up down 200 points, I'm not jumping right in. But if I see something where it's starting to trade positive, even though the market's way down, it's because this is being influenced by something other than the market. On a normal day, if the market opened way down 200 points and this opened positive and just kind of hovered there, it could be 45 minutes, it could be 5 minutes, all depending on whether there's signs of strength or not. Now, remember on our entry strategy quadrants, that if the market opens positive and the stock that you're looking at opens positive, that's probably a good indication that it's time to get in immediately. So I might be within the first 90 seconds to 3 or 4 minutes. Oh, yes, so there was no buying. Yeah, I wouldn't be buying because the market was opening much lower. But the 3 picks that we made, I'm watching, and I can see it's up a little bit, it's up a little bit, up a little bit. So they're buying this one, even though the market's down. Again, because it's an oil or an energy-related stock, that means that's being more influenced by crude oil prices than it is the market. So started buying right in here because it was moving in the right direction. Same scenario here. And the reason we're a little bit more, inclined to buy on strength is because of this signal or this pattern. So this is not unusual. I say this is not unusual. That on a day where the markets may be heading down, that the ones that are coming out of patterns are still acting well. So still buy them. Now, let's see if I can find an example. Let's say you had something like this. Let me see if I can. That we're ready to buy this one on positive trading, but the market opens down. This gaps up, and then because the market's down, it's kind of wallowing. I may sit here and think, all right, I'll buy this if they come back up. It doesn't come back up, doesn't come back up. So may not get into that at all. So the entry strategy, I forget when we're going to, did I mention when we're going to do that one again? Tomorrow? Oh, maybe it is tomorrow. Yeah, show you and everything we do as far as entering a trade, based upon whether the signal or pattern is confirming, and what the market is doing is all based on common sense. That if the market you can see is heading lower and you're ready to buy something and it's not confirming, yeah, you don't have to jump in. On the other hand, if you're ready to buy and the market's, you can see the pre-market futures are showing the Dow's going to open up 70 points and the NASDAQ up 15. Yeah, you're probably going to be more inclined to get in much faster. How do you know if something is having a climax day or just a real good day with a bar like 9? Because what was the reason for looking to get into 9? It wasn't that we were expecting a big climax day. It was expecting that was confirming one of our recognizable patterns. Yeah, kind of a slow curve breakout. So the rhetorical, or the question I always get asked is, well, do you always get a big price move on a breakout like this? And the obvious answer is definitely not. We're just hoping it's going to be maybe over the next 3, 5, 7, 10 trading days, it's moving in the right direction. The other criteria to that is, or the other offset to that is, that when you're buying a pattern with expectations of heading in the right direction, there's going to be times where you do get in a situation because you happen to be in the right place at the right time and get a 22% price move. So if you just break it down to real simple basics, when you're buying candlestick signals and patterns because they are the recreation of what human nature does time after time, you're just putting yourself in situations where the probabilities are much greater that you're heading in the right direction or you're putting yourself in the right direction at the right time. Maxar, you could see what happened on this one after it broke out. Today it consolidated and then closed up positive on the day, continuing this uptrend. Make it a little bit smaller yet. So now what do we got? That's the right. Now what do we have? Got kind of a hanging man, doji in the overbought area. What do we want to see tomorrow? We want to see it still probably trade in a positive direction. Don't want to see it open and start trading lower because that would tell us the hanging man doji is telling us it's time to start taking some profits. Fitch backed off today, but here's another little piece of evidence that I think I mentioned earlier in the chat room today. Anytime you see something come right back to the T-line and bounce back up, that's for us is additional credibility that the bulls are in control. And why is that? Because if we consider the T-line a natural support and resistance level of human nature, number one, and number two, the fact that nobody has the T-line on their charts, that this is visually telling us that this hit the natural support level and came back up. That's other or additional credence that this is where the bulls step back in, and that gives you additional confirmation that this is still in an uptrend. So remember, nobody has this line on their chart, the T-line. We use that greatly to our advantage to know that that is kind of a Fibonacci support and resistance type level. So you stay long on Fitch. ARLP. There's your fry pan bottom. There's kind of your little bobble breakout. Today it did almost a doji sandwich. I would suspect more upside on this one. And Michaels, This one happened to open right on the 34. Now, I have the 34 on my charts because it's what I would call a minor support and resistance. It just seems to work. So again, right in this area, the T-line, the 34, it's still working. And why is this a good uptrending stock? Because our best friend signal told us there's a major change of investor sentiment. ENPH, same scenario. Came right down, used the T-line as support. So the thing that should be kind of sticking in your mind is that if nobody has this on their chart, look how often, when it is on your chart, it shows where the reversal has occurred. So that's not happenstance. That T-line is an indicator of where natural support and resistance occurs in human nature. And then EPZM. Now, had this closed down here, then I have another decision to make. It has to open positive and trade positive to stay in it, if I stayed in it. If it opened lower and started trading down, that told us that gap down and not coming back up above the T-line told us the bears had taken control. So knowing what your individual signals and patterns are, Luckin Coffee, what did it do today? It did a bearish doji sandwich below the T-line. This one should have been closed out. More than likely, once it opened and started trading lower, that was a good indication to start closing out that position. Because the fact that it didn't hold the T-line and come back up, you didn't know which way it was going other than it gapped down. Closed it here? No. I would have waited to see whether they came down, hit the support level, and waiting to see whether it was going to open positive today. The fact that they gapped it down again told us the bears are still in control. Let's close it out. Now, if I wanted to trade this or get back in it, what was my worst case scenario? They brought it down and then brought it back up through the T-line. I could always buy it back. Why would I buy it back? Because now they're bringing it up instead of taking it down with a good indication that they're going to keep it up above the T-line. So if I sold out here, let's say at 35, let's pick out a better number. At 35.75, and then it came back up through that level, I could have always bought it back, even if I had to pay $35.95. All right, so that 20 cents that I missed out on was just insurance that I wasn't holding on to something that had gone down another $2. All right, some of the big ones. Western Digital closed just above the T-line with an inverted hammer type signal. But we also know when would you go short since it now closed below the T-line? Sue, probably on a lower open tomorrow. Making the first target here, second target. So if I saw this open lower and start trading lower, yes, you could probably be shorting it. Whoops, what was I doing? Western Digital. Western Digital, kind of an inverted hammer, spinning top. So I've already got a game plan for this one, which is it has to open positive and start trading positive to stay in it. If it opens lower and starts coming down through the T-line, what's it tell me? They're still selling this off, close out the position. Now, things like this. Here's Apple. Ever since it broke out, what's the criteria? It's never been able to close below the T-line. what was the scary part today? It gapped right down to the T line, but then very quickly it started moving back up. So what was that kind of telling us immediately? So far, they weren't closing it below the T line. And now we look at it and say, all right, we're in the overbought condition. Again, look how long you've been in the overbought condition. Ever since this point, the uptrend is in progress. Do you see T line failure to get back over? Not, I don't know whether on any frequency. And the frequency doesn't matter. Because your analysis is based upon what's happening right at this level versus, and so yeah, as far as the frequency, you're still evaluating each situation on its own versus whether one happens more often than the other, which is kind of a babbling way to say I have no idea. It's just that you still want to analyze what's happening at those levels, no matter where they're occurring. Supported on the 20 and at the prior, well, that could be, but remember, this is what we're looking at right now. What is the force of the investor sentiment right now? The Stochastic's heading down. Probably a good indication they're starting to sell this off because of this signal. Now, notice what happened here. What signal was this? Right here. Anybody? Laugh. Nothing. There you go. Yep. Remember, RT, this is a trick question. Remember what has to happen on a dark cloud. This has to open above any of the previous day's trading. Where would your stop be if I went short? Probably tomorrow, if it opens lower, the T-line's probably going to be down here somewhere. I'd still use the T-line. Yeah, so the signal didn't become a signal until you saw the doji sandwich. A bad friend. Bad, okay. Okay, Amazon. Another very simple observation. It opened on the T-line and went positive. Now, that in itself has two ramifications. One, if you're trading Amazon, you're staying long. Or two, if you're evaluating what the overall market is doing, when you see Amazon, Apple, Netflix, all the ones that everybody's following, trading positive, what can you assume from that? There's a lot of bullish sentiment still in this market. They're buying the ones that everybody's trading. NVIDIA, not quite as strong, but what is the rationale? They close back up above the T-line, so you can be watching this for a for more upside. A bearish piercing signal. No, there is no bearish piercing signal, Bert. A bearish piercing signal is called a dark cloud. And this is your ABCs of candlestick analysis, is the signals themselves. What are the criteria for a dark cloud? Has to open above any of the previous day's trading and has to close more than halfway down this candle. So at this point, we don't have a sell signal and we don't have a close below the T-line. But we do know the doji rule, that they're going to probably trade it in the direction of how they open it after a doji, which told us we better see this open positive and trade positive to tell us the uptrend's in progress. The fact that they gapped it down and started trading it lower should have told us, let's get out of this one. Because the worst case scenario is that it comes back up, we can always buy it back. But anytime you start seeing a signal developing, trading below the T-line, you should immediately recognize that the probabilities are now going against you. Facebook, another one where they can't close it below, haven't been able to close it below the T-line. Tesla. Now that's not a piercing signal, because it didn't close more than halfway up this candle. But it did tell us one little piece of information. They weren't closing it below the T-line. Now, when they started trading a positive, what type of pattern do we have setting up? Well, there's your classic pattern. Fry pan bottom, strong price move. Prerequisite for a J-hook pattern is a strong price move. You're in a J-hook pattern. There's your best friend signal. Doji gap up. All right, the reason I point this out is if you don't want to boggle your mind by trying to learn every single signal and pattern, learn a few of them. Know what to expect after a best friend type signal. So if you've become an expert at the best friend signal, you know what you can be doing on this one. Want to see it trade positive? If you're buying on positive trading, you probably don't want to see it close back below the close. If it opens lower, you don't want to go after it until they can bring it back up through that level and tell you the uptrend's in progress. Gelled. There's your kicker signal. What else is it creating? Try another J-hook pattern. Can you look for more upside in Tesla? Yeah. If this is wave 1, that's the same magnitude we're expecting for wave 3. Ampy. What's it setting up? There's your J-hook pattern. What adds credibility to this J-hook pattern? Bullish engulfing, almost a trend kicker, support right off the 50, close above the T-line. Now we'll close above here. What's our upside expectation? Wave 1, wave 3, the same magnitude. Oh, I thought that was the case too. So what have I done here? Why the heck is the moving average well. That up. Okay. Hit AUK. Hit add. So why the heck is that moving average not coming up? Well, it's on here, and now I've got it on twice. That just makes you want to kick your grandmother. All right. I don't know why the 200-day moving average isn't on that chart, but that's what I saw also. I thought, yes, that was the bobble pattern, Now I don't know which one of these is correct. It's a 200-day simple moving average. Which one's correct on this one? Is it this one or this one? That's not a test question. The top one's the correct one? All right. So I've got to get rid of. There we go. Okay. So there's another bobble breakout. There's another bobble breakout, ELOX. And BC, I don't know why I have this as a bobble breakout, but it's a good J-hook pattern. There's a good breakout. Kind of a wedge formation. Breakout to the upside. Assume, no, that's up to each individual, the time frame. Now, so I'm trading the daily because I'm using, my trades are usually anywhere from 2 to 10 trading days. Now, if I was trading a little bit longer term, I might look at this and say, all right, is this a new trend? Let's go to the weekly. And it looks good on the weekly. And if I had another one that looked like, let's say I was looking at another chart, but that weekly chart looked more like this. If I was deciding between the two, I'd say, all right, I'm going to go after the one that looks more like this, shows more strength. So I don't use the weekly, or wouldn't use the weekly to be my first criteria. Maybe it would be an additional confirming indicator if I've had to decide between a few positions and I want to pick the best one. GTT, you can see this is kind of sideways, but your alert is the fact that you have a morning star signal right here, that if this gets moving or confirming the morning star signal, it also may be confirming wave 1, wave 2, going into wave 3. Now the oil stocks are still showing some strength. Here's pump going into wave 3. PDCE, another kind of J-hook pattern. Notice how they gapped up through this level. That's usually a very good indication as far as the bulls, that if you can see there's a potential resistance level and they gap through it, that's a pretty strong indication that not only do they have no regard anymore for that resistance level, but they've gone right through it. It's going much higher. Another kind of J-hook type pattern on EXTN. Where would your first target be? It looks like there's a wee little teeny gap right here. First target, and then I would suspect the 200 being your next target. And there's your proverbial J-hook pattern on EOG. And observe the obvious. Came up to the 200, pulled back to the T-line. What did it do with the T-line and the 200? A bullish engulfing signal. Now kind of a double doji setup. where do you expect your upside potential to be? Wave 1, wave 3. Now, the other side of that coin is, will it move to wave to that magnitude? I have no idea. But that would be the essential target. But what is the final criteria for closing out this position? If you saw a sell signal in the overbought condition. SYNA. We're right there. That line is. Well, what's this kind of imply? Maybe up here somewhere is your next target. Zixi, J-hook pattern, gap up. At least we kind of figure that our next target is probably up here toward the 200-day moving average. Oops. Can't read my own handwriting. So here's another one that you watch. You've got the fry pan bottom. You've got the potential J-hook pattern. And notice what it did today. After gapping down, came back up. That if this started setting up, at least you could be ready for another move of this magnitude. So at least this way, visually, you can get ready for things. Have them on your watch list. Ballard Power, when it broke out, Morning Star signal, told you were in the next wave. So this one you may not be buying now, but this is the type of thing you want to look for. Where is the breakouts, and is the breakout being preempted, not preempted, but precluded with a buy signal? Left-right combo, Morning Star signal, gap up through the resistance level. That information puts you in situations where you'll be way ahead of everybody else by being in the right direction at the right time. Another little fry pan bottom breakout on CNCE. That one should be, if it trades positive. And a while back, there was lots of discussions about white soldiers, and everybody was looking at the one white soldier. There is not one white soldier that I'm aware of. But this is what you call three white soldiers. Notice your inverted hammer doji best friend gap up, kind of through this resistance level. And the white soldier, the three white soldiers, is a big up day. Next day they open it lower, take it up. Next day they open it lower, take it up. What that tells you is every day there's some profit taking, but the buying starts again. Profit taking and buying starting again. That tells you you've got a very solid buy setup at this point. So the markets have told us one primary factor. They haven't been able to close below the T-line. Been pretty scary, but the final analysis is they haven't been able to close the T-line. We have to assume the probabilities are heading in our direction. You set alerts on the T-line to add to a position. No. If something's pulling back, I would rather be buying into confirming strength than trying to bottom fish on a pullback. Because if it's pulling back, what is it telling you? It's telling you there's not a lot of bullish strength there. So I'm not trying to get the absolute bottom of a price move. I'm trying to get that fat part in between or in the middle. If I can dramatically improve my correct trade ratio, the compounding effect of your account will be tremendous. Now, what gets in most people's way is the ego factor. They hate to buy something that wasn't right at the very bottom. I hear in the past, everybody says, oh, this stock pulled back to 82.50, and I got it right at 82.50 and it went back up. Well, every time somebody does something like that, there's probably 90 times where they've missed. Up some readings. So, no, you don't want to buy on a pullback. I don't buy on pullbacks. There's only one pullback that I will buy. I'm trying to find one that would illustrate that. Was it? Darn, I'm trying to find one. Sometimes when they first break out on a big move, the next day they'll pull back and they'll pull right back to the T-line, profit taking, and then they'll start back up. Well, if I see that where I have a buy signal and they start taking it up, and the next day they take it back down to the T-line, then I'll flip to my 10-minute chart and see what it's doing after it's hit the T-line to see if it's time to buy in that pullback. Otherwise, I want to be buying into strength. I want to know that the trend is moving in the direction that the signals told me it should be moving. Apple today, you had no idea what was happening. I mean, once it pulled back here, yeah, if you were gutsy, maybe I would have bought it here or here if I wasn't in it. But with it opening back here right on the T-line, yeah, we didn't know whether the market was going to head down another 400 points. So I'm trying to find something. I'll find one. JJ Kicker in an uptrend. I forgot what the question was. On Billy, where should we put a buy stop? Oh, boy. If you were buying on positive trading, I wouldn't want to see it traded all back below this level intraday. And more than likely, I wouldn't want to see it close back below the halfway point of this candle, because what's the assumption? The assumption is your best friend signal tells you should be in an uptrend. 3 white soldiers tells you should be in an uptrend. You probably wouldn't want to see too much selling at this point. Wouldn't you buy if a pullback drops to a key moving average and forms a strong? Yes, John. If I saw, and I'm trying to figure out, if they happen all the time, I just haven't been able to find one. But let's say, for example, let me use this. Let's say, for example, this did this big breakout, and the next day it opened here and started trading all the way back down to the T-line. Well, we already know we have a strong buy signal. We know we have some consolidation. And as soon as it got to the 10-minute or to the T-line on the daily chart, then I'd flip to my 10-minute chart and then see if it was going to be starting to pull back up from there. Let me see, CRPT, whoops, CPRT. Yeah, something like that. But it's usually more exacting. But that's kind of the example, that when it pulled back, if it started coming back up, yeah, maybe I'd go after it at that point. Rama, hold on to your individual ones until I tell Jim to do the double line. Okay, so the underlying or the main analysis should be telling us that this uptrend, ever since it broke out through this level, is still in progress. And the evidence of that is the index is closing above the T-line, which, if you believe in the T-line probabilities, that as long as you're closing above the T-line, the probabilities tell you you should be still on that you're still in an uptrend. Would you monitor the pullback on a 10-minute chart? Well, if I was looking to buy something, I wouldn't necessarily monitor it. But if I saw something open up, and let's just say hypothetically this was a stock I was ready to buy, and it opened here and started drifting back here, I probably wouldn't pay attention to it until I saw it actually hit the T-line. Then I would flip over to the 10-minute chart to see if it was going to hold. Okay, any general questions on candlesticks? Do we have a session tomorrow night on entry and exit strategy? We might. Haven't filled out my new calendar yet. It could be a bearish Harami. But once again, notice what it did today. As soon as it hit the T-line, it came back up. So if this opened lower and started trading lower, yeah, I'd probably close out the position, waiting for it to see if it's going to do a J-hook pattern. If it opens positive, that tells me that this was just a consolidation day. All right, okay, entry and exit tomorrow. So again, the entry and exit strategies is just merely common sense of when you want to get into a position. Okay, I guess with that, Jim, go ahead and do the double line. And in 3.9 seconds, do the next double line. NCR, you can see what's happened here. Right about this level, you've done your hanging man doji. And now look what happened today. Let's see, make this bigger. This would be a good short if it opens lower tomorrow. Because now what would you have? You'd have a doji gap down. And then look where it opened today. Closed up here, opened back here, did a long-legged doji. If it opens lower, you've got a bearish flutter kicker. That would be a good short. Juniper, oh boy, this is a toughie. I probably would have closed this one out today if you were long. First of all, notice it failed at the 50 and then gapped down. More than likely, I probably would have closed it out yesterday or on Friday because of that gap down failure at the 50. Now, this one you can go short if it comes back down through today's open. That would definitely tell you the T-line is acting as a downtrend. OCUL, you can be buying this one, but you want to need more confirmation as far as strength, and then that's your first target. You want to see it get up through that level. Glue, you can buy this one on positive trading, kind of a doji sandwich breakout on positive trading tomorrow. NTNX, a left-right combo, it's kind of a bullish Harami right off the 50. You can be buying this one. I don't know where all these lines come from, but I wouldn't be afraid to be buying this one. Wave 1, wave 2, potentially wave 3. Gap. Not a real good reversal signal, but it would imply that when they've supported at the 50, the next target is going to be the 200-day moving average. Williams Brothers, you can get ready to buy this one, especially if it comes up through that resistance level. NVAX, fry pan bottom, type breakout. You can buy this one on strength. If I was buying this one on strength, I wouldn't want to see it close back below today's open. SMCR, you can see where the you had the T-line crunch breakout. I would suspect they're heading for the 200, so you just watch to see what happens once it gets to the 200. This one has to open positive and trade positive tomorrow, doing the J-hook pattern. If it opens lower, now it looks like they're coming back down to test the 50. Sohu, another one that has to open positive, because you've got a shooting star, doji. I would have a safety stop just below today's low, because if it came down through there, you're curling your stochastics down. And you're right here at this level where it topped out before. So it definitely has to open positive and trade positive to stay in it. Left-right combo breakout. You're almost to this resistance level, so look for a little bit more upside. And then see what it does at that resistance level. ACAD, another morning star signal. Left-right combo. If I was short, I would have covered the short at today's or yesterday or Friday's high of the doji. I wouldn't be going long just yet until you see a bullish confirmation. Nothing here. If you're long, it has to open positive tomorrow. We did this one, right? Oh. Yeah, it has to open positive. BlackBerry, J-hook pattern, look for the 200. SWKS, yes. Kind of the gap down and it never recovered today. First target, second target. Let's see, did we do AMRN? Nothing. Wouldn't be long or short this one. You did support at the 50, but you need to see a lot more confirmation getting up through the T-line. Now, all you can do here is stay long. Good bullish confirmation by staying above the T-line. Every time they opened it lower, they've taken it back up. And Coop. Coop, 3 white soldiers. Stay long on this one. Roku is trying to get going. It still needs to break this downtrending channel, get above the 50. You can buy this one on positive trading tomorrow. Just don't let it close back below the 50. And FLT, nothing yet. You had a bullish engulfing. It needs bullish confirmation. It wouldn't be the greatest chart, but it should be heading in the right direction on positive trading tomorrow. Halliburton, you can get ready to buy this one on positive trading. Wave 1, wave 2, slow curve going into wave 3. Disney, nothing. Would not be long or short. And Boeing, Boeing, you can get ready to buy, but I'd want to see more strength. You do have a best friend signal. You can buy on confirmation, bullish confirmation. Definitely needs to break this downtrend. Plug. Best friend breakout. You can buy on strength. Again, these big best friends, you want to see additional confirmation. And then you don't want to see it close back below where it opened or closed today. If it closes below that level, you stay out of it until it comes back up through that level. Nokia, nice fry pan bottom. You can be buying this one. Abercrombie, a big wedgie, yes. Yep, so you got a wedge formation. Just watch to see which way they're taking it from there. Yeah, we've got Beeline Crunch, we got Doji sandwiches, we got stick sandwiches. CrowdStrike, watch to see if it can break through this level. If you're buying, just be conscious of that resistance level. All right, everybody. I think the proof of the pudding right now is not being able to close below the T-line gives a good indication that there's still bullish sentiment, and that is being confirmed by the fact that all the biggies are still being bought. So there's no bearish sentiment out there right now. All right, we'll see everybody bright and early in the morning. We'll see you then.